master it, you can create a massive income generating machine for yourself. But if you don't have the right foundation, you can spend years losing money trying different things to figure it out, only to find yourself more confused. Because the trading world is confusing, with millions of people saying millions of different things. Okay, I've been trading for over 7 years now, and I'm completely self-taught. So whether you have some trading experience or you're brand spanking new, what I'm going to show you today is a simple process that I wish I took from the jump to start doing things properly. I'll show you how to rewire your mind to think like a trader, all the softwares that you're going to need, how to do simple charting, understanding trading math, all the custom tools that I've built over the past several years, and how to gain access to capital starting with a small amount of money, so that by the end of this video, you'll have a clear path to master trading and hopefully create that income generating machine for yourself. All right, so before we start, I want to do an exercise. So I have a coin right here. Heads is going to equal $300 and tails is going to equal $100. If we flip the coin 10 times in a row under the same conditions, we'll know that roughly we'll get 5 heads and 5 tails. And that average will still statistically hold true even if we get 3 tails in a row. Now, knowing this, it wouldn't really be logical to get emotionally invested in the outcome of each coin flip. And we know that we'll get approximately 5 tails for $100 each, which will leave us with a net gain of $1,000. Now, the losing trader mindset is to put importance into the outcome of each individual coin flip, whereas the pro trader mindset instead will focus all of their effort on keeping the same conditions for the coin flip and tracking on average how much they make after the coin flip. Now in trading, this coin flip is going to be equivalent to our strategies and practices. It's all going to come down to winning probability. If you go into trading understanding this exact principle, you're going to be ahead of 80% of other traders when they get started. But that only takes us so far. Now we have to learn how to actually implement this into a trading market. All right, let's get into lesson number 2, where we're going to talk about software. Today I'm going to talk about 3 foundational softwares where basically you can get started trading using these things. First thing is going to be TradingView. The second thing is going to be Excel or Google Sheets. And then the third thing is going to be an exchange. Okay, so personally I trade cryptocurrency, so I'm using either Bybit or Femex as an exchange, but depending on if you're trading for you can use to actually buy and sell. We don't really need to focus on this more. Alright, so let's hop over into TradingView. You'll notice my chart just has candlesticks on it and nothing else. Okay, this is a big thing for you to understand. And this is something that I've noticed throughout my trading journey, watching people who haven't succeeded and who have succeeded. What's really important to me personally, okay? There's so much that you can add to your charts.
It's been a long fight, and I just had to beat the Warriors.
Okay, there's so many indicators that we do use once we get more advanced, but you have to understand most people start with a process that doesn't work, and then they add extra stuff to their chart in order to try to make it work. Whereas the successful people, and the right way to do this is to have a very simple chart. Understand what moves the markets, how to actually trade that, and then as you're starting to see success with the fundamentals of trading, you're adding more to it to complement simplicity. If you're doing the opposite, you're already wrong. You're going to confuse yourself with something called paralysis by over-analysis, and this is how people run themselves down a rabbit hole of never actually being able to understand how to trade. Do not do that. Start simple. I'm going to walk you through the entire process to understand exactly how much you need to start, and then we can add stuff as we go. Promise me that you're not going to do that. If you have a crazy chart with indicators all over, wipe it clean and follow along. So right here, I have my chart pulled up. This is on Matic. So I personally trade cryptocurrency. The reason I trade cryptocurrency is because the market is open 24/7, and it allows me to use high leverage, so I don't have to use a lot of my capital to take really large positions when I'm trading. Okay, I'm going to explain this in way more detail in lesson 4. All right, so here we have our chart frequencies. I'm going to go over really quickly. The bottom of this box is where the candle opens. This is the lowest price in 5 minutes. This is where the candle closed, and this is the highest price went in this 5-minute increment. Same thing with the orange. Closed here, and then the highest and lowest are still the same. This is a simple standard way for us to see where the price is moving. All right, but I still think that most traders actually what moves the markets. So, what moves these candles are so you can see up here, these are all sellers in red, and down here, buyers. And in order for this candle to move up, these buyers who want to buy into the market have to take orders from these sellers up here. So if I wanted to enter the market right here, the first available order for me to sell is going to be down here. If there's more buy pressure in the market, Something that you have to keep in mind is when we're looking at charts, this is the visual representation of psychology. So all those people making buy-sell decisions, institutions, algorithms that are all involved in the market, we're able to see those actions collectively and start to use patterns to make sense of it. And so all we're really seeing is a battle of supply and demand on our chart. As the supply increases, if the demand for that at higher and higher prices starts to slow down, the price will retrace until the demand starts to outweigh the supply, and then once the demand is back, the price will continue to move up. So all we're seeing is a big increase of supply and no demand, and then the demand coming back. All right, and one of the key premises of trading is predicting where those supply and demand imbalances will happen before they happen, so we can enter the market and benefit off of those changes. So if we can figure out that this area is going to be a potential reversal area where the demand will start outweighing the supply, we can buy here, wait for the price to continue moving, and then sell it for a higher price. And that's how we basically trade in the supply and demand an entire ocean of other people who also want to buy and sell these instruments for different reasons. So predicting these levels is obviously the golden answer of trading. If you figure out a way to do that, and you figure out how to position yourself in the market, then you can make consistent profits. One of the most effective ways to do this is by using trends. So, we can start to anticipate where the demand will be higher than the supply, or the supply will be higher than demand by using trend lines. So a trend constitutes of a high, a low, and then a higher high. This is what's required for an uptrend. Okay, same thing for a downtrend. If we have a move with a lower low, a lower high, a secondary lower low, and a lower high, that constitutes as a confirmed downtrend. All right, and we can use trend lines to start to look at these important levels. So if I click a line from this low all the way up to here, you can see the price is bouncing off of that demand outweighing the supply zone until all of a sudden the demand is no longer there and the price drops to this level, and now we have that trend broken, which is going to lead to a new potential trend. All right, so here's another example. So we have supply outweighing demand here, as well as supply outweighing demand at this level. So if we draw a line from here, and then we take a parallel line and we go to this lowest point on the other side of this move, if we go ahead and play this chart forward, we can predict roughly where this price will end up going through before the demand outweighs the supply. We get a response off of that trend, and then we end up making a move higher. So just like our coin flip, we understand that we could get tails and this would keep moving, or we can get heads and we can be right about predicting that supply demand zone and have an opportunity to take a trade. So if we decided to buy, say, 1,000 units at this level and then allow this to go forward, we can end up selling it up here to make a nice profit on the trade. However, one of the biggest mistakes you can make as a beginner is entering your trades, number one, without a stop loss to manage risk, and number two, with a random amount of units. Okay, because 2,000 units of Matic that we got for 83 cents done on something like Ethereum, which costs $2,400 per token, you can see the position size is going to be vastly different. Okay, we just lost theoretically $23,000. So instead of potentially risking $10 on Matic, we lost $23,000 theoretically on Ethereum. So every time you're entering a position, you need to know where exactly you're entering, where you're going to be taking profit, and where you're going to be selling and leaving the trade if we end up running out of shares, if the trade ends up going against us, so that we can contain those losses. So say, for example, we wanted to buy here, we wanted to take profit here, and we wanted our stop loss to be placed here. Say we wanted to risk $50 on this trade. We need to enter at this specific level with this exact amount of units in order to risk $50 and attempt to make $210. Once again, our heads and tails, the $300 on heads and the $50 on tails is only going to be possible if we're setting our trades up this way from the jump. Here's another big stupid one that I hear a lot of times from other trading influencers where they say, yeah, you know, I was really confident about this trade, so I took more size in this one, and I wasn't so confident on this trade, so I took a little bit less size. If you start deciding which setups you're going to put more size into, you're going to directly start making decisions based on your emotions. Okay, instead of following a process and following your simple strategy where it's either I'm taking the trade or I'm not, you're deciding I like this one better, so I'm going to put more money into it. Okay, if that one goes against you, you're going to start thinking, well, oh, the time that I thought the one was going to work out, I put more money into it and I lost, so I'm going to find the ones I don't like so much and I'm going to put more money into those, and you'll start running yourself into this stupid rabbit hole Okay, don't listen to people that are saying things like this. Trading is supposed to be very systematic. The less emotional decision making that you need to make, the more effective of a trader you are going to be. And the way you do that is by following your exact strategy every time. You can't hone in enough on that. Okay, because the closer you can follow your process, the closer you can figure out out of 10 trades, how often does my trade hit this full stop loss value? All right, because then it simply comes down to a combination of win rate and the risk factors on your trade. So when I say risk factors, if we consider your risk, which is in this case $50, one risk factor, if this moves up by 3x your risk, that is 3 risk factors. We make $150 on this trade. Because then it just comes down to different combinations of your winning percentage or the amount of times that you are right versus those risk factors that you're making. You can see even if you're only right 30% of the time, if you have a 1 to 3 risk reward where you're risking $50 to make $150, you can pull out of that basket. Okay, so the goal of trading is to use your practice, use your journaling to take more winning trades so you can be more at, say, a 50, 60% win rate at a 1 to 2, 1 to 3. You can be sitting right in this pocket here. And that's with most traditional trading systems, how you can hit that sweet spot and be able to make consistent profits over time. Get this whole notion out of your head that trading is about being right or being able to predict what's going to happen. Okay, any trader that's saying, oh, I lost a trade, so that's automatically bad, don't listen to those people. There are good trades and there are bad trades. If you make a whole bunch of money on a trade that was really, really risky, even though you made money on it, that's still a really stupid bad trade. If you lose money on a really good setup where you're putting yourself in a position for one of those coin flips, that is a good trade whether you make money or don't. Make sure you get that through your head and don't listen to these other idiots online that are going to say things like this. All right, let's move into lesson 4, and I'm going to explain to you access to capital in using leverage, which is going to allow you to start trading with a lot less money, but also if you know how to do it properly, it's also no more implied risk. So let's go back to our Matic example here. By the way, if you want to use this position size calculator, go into the description and join our Discord. All right, we have a whole free section of our Discord where you can chat with other traders. Okay, we put out trade ideas from the private side of our trading team that you can follow along with to get yourself started. If you go into this resource, click on this link. Not only are you going to get all my trading view indicators, you're also going to get tons of other resources that we put together in a one-stop shop. We have everything that we talked about in other videos to get yourself started trading the right way. So let's go back to our Matic example. Say we wanted to buy here, take profits here, and sell here. Say we're beginners. We want to risk a really modest amount of money. So $25 on that trade. Okay, even only risking $25 on this trade, we're required to enter 1,500 Matic tokens at a price of $1,500. So once again, risking $25 requires us to have $1,500 worth of capital without the use of beginners. We want to risk a really modest amount of money. So $25 on that trade. Okay, even only risking $25 on this trade, we're required to enter still with 1,831 Matic tokens at a price of 0.1 So once again, risking $25 requires us to have $1,500 worth of capital without the use of leverage. But say we add 10x leverage to this. That will drop the capital requirement for the trade down to $152. All right, so for example, if I go over to Matic and put in my 1831 units, you can see without leverage, this is going to cost me about $1,400. If I increase the leverage, say to that 10x leverage, now the cost of this position is going to be $145. But this is also going to increase the amount of fees that you need to pay on the trade. So if you're paying a 2% commission, that 2% commission is still going to be coming off of the total actual cost of the position, not just the cash requirement to enter it. So that's something to keep in mind for moving forward. Okay, but leverage is going to allow you to take really normal size trades, and it's really no more risky so long as you're still calculating your positions to risk a certain amount of money. All right, but you shouldn't even be using an exchange or leverage until you complete lesson 5, which is what we're going to talk about next, which is going to be journaling, practicing your trades so that we're able to scale our accounts. Okay, so say we've taken our trade risking $50, we make a 1 to 3, so we made $150 on this trade. You should immediately be screenshotting this trade to track it, taking a screenshot of that chart and journaling the date of entry, the ticker, whether it was a long or short, how much money you made or lost on the trade, and any notes that you want to take on the setup. That way you have a log of all of the decisions that you've made, all the trades that you've taken, and you know over a certain amount of trades, over a certain amount of coin flips, how much money you actually made, what percentage of the time did you make or lose money, and how many total trades did you take. Okay, so I built this custom spreadsheet as something very simple that you guys will get access to if you get this Inevitrade Trader suite of tools. This is the only way that you'll be able to have the proof of concept and know that your trading is actually working out, because until you have the proof of concept, until you know that your trading is working, it doesn't really make sense to hop onto an exchange and start using real money if you don't have the proof of concept that your trading works. If you're not practicing and being profitable with your strategies, then you shouldn't be putting money into the market at all. That should be the last step that you do. Okay, what I will say, once you are proficient and you are starting to see some results, don't hang out on the sim account too long, because it's going to make you complacent and it's not going to get you set up for success. Trading the real markets, trading real money with real money on the line is much different than trading with practice accounts. And a good way you can do this a lot faster than just waiting for the market to set up with real trades is something that you've seen me doing throughout this whole video, which is this bar replay button right here. So what I like to do is, regardless of the system I'm trading, I can click on a random coin. I can go back, say to where I don't even remember, like I'm not really looking at the chart, and I can just click in a random area. All right? And once I've clicked in a random area, I can just be doing my simple analysis, right? So you can be following your strategy here. You can play this trade forward, seeing what would have happened. So say we drew our analysis here. If I wanted to use my position size calculator, I could put my entry here, my take profit here, my stop loss outside here, put $100 of risk, hit apply. This will show me my quantity, 3.5. So then I can go in here and type in 3.5, hit sell. All right, so say we're up $266. We take profit off of there. Okay, so now you take a screenshot of that. So then you go over to your journal and put in the 266 over here. And I designed this so that this will auto update the total for everything. You also have a trading stat sheet, so you'll see on all your longs and all your shorts how you're doing on each thing. And then once you have that proof of concept, like I said, you can head over into the exchange. All right, and these principles are exactly what we do in the private side of our Discord. Okay, we have people mastering all these systems that me and my team have put together. All right, and we make sure that they keep their framework focused on these principles. You can see crew with a nice TCL max win. I need a max win. Okay, another really nice win here. Landon's absolutely crushing it, making wins left and right. Really, really high winning percentage. Okay, 4 out of 4 right here. Okay, Connor says massive shout out to the Inevitrade team. In 10 short days, 7 trading days. I literally doubled my trading account thanks to the TCL system. Trading systems that we teach. So shout out to you, Connor, and shout out to the Inevitrade team for all the system development. We have so many crazy things. I mean, this is just us scratching the surface of the basics of trading. This is why I have a passion for trading, because you can get so deep, it's so interesting. If you master this process, then you can create an income generating machine for yourself, where you can travel the world, you can live wherever you want. You have time, location, and income freedom, and you can scale your income to basically however much you want. Okay, if you're still here and you found value in this video, make sure you hit the like button, subscribe to the channel if you like trading and investing, right, and you want some no BS trading education. All right, and if you had an epiphany moment in this video where something really helped you, let me know in the comments. It feels good to be able to read that I'm helping people out and I'm helping people learn along their trading journey. But anyways, guys, that's really all I have for today. Until next time, guys, I will see you all in the next video.
Welcome to today's deep dive into technical analytic charts. A comprehensive breakdown of how to use technical analysis the right way. You probably know that money. And you may also know that most traders do not understand the right way to read a candlestick chart and to apply. One of the things that's really cool is technical analysis is a universal language of the financial markets. It doesn't matter if you're trading Bitcoin, Ethereum, Forex, futures, or stock. Any financial instrument, when you pull up the candlestick chart, will give you the opportunity to perform the same level of technical analysis. So once you understand the fundamentals of technical analysis and you learn the right way to apply it, you can use it for any financial instrument. I encourage you to take some notes, and at the end of this episode, I'm going to have some recommended reading for those of you that want to keep going on the journey. So let's go ahead and jump in on the whiteboard. Now, prior to candlestick charts, we had just simple line charts. The problem with a line chart is that the line is created by connecting two dots or more. These dots are just based on one point of data. That one point of data is typically the closing price. And while it's important to know the closing price, that's only one piece of data. So let's introduce candlestick charts. A candlestick chart gives us 4 pieces of information for each candlestick. It tells us the close, but it also tells us the open, the low, and the high. Now, here's what's really interesting. The shape of the candlestick is now communicating a message. Because let's just say for a moment, let's flip this over. Let's just say for a moment that you pull up a candlestick chart and you see a candlestick that looks like this. What kind of message does that tell you? That tells you clearly that the price opened high, it went straight down, and it closed at the bottom. In contrast to these two candlesticks here, these two candlesticks have a candlestick body, which is the middle section. That's the body of the candlestick right there. And they both have an upper candle wick and a lower candle wick. The upper and the lower candle wicks connect the low and the high. When you have a candlestick that doesn't have any wicks, it just has a body, that shows really strong sentiment in the market. So a red candlestick like that, a lot of weakness. The opposite would be true of a big green candlestick like that. And so what we've actually learned is that once you understand the language of the financial markets, it's almost like learning to read traffic signs. They become so obvious, you don't second guess them. You see a stop sign and you stop. So for instance, when I'm trading and I all of a sudden, I'm watching something, it's going up, the price is going up, and then all of a sudden at the top of that move, if I see this candle right here, I know that it's about to change directions. Why is that? What is this candle communicating? It opened low, right here. This was the open, this was the close, this was the high. So it moved up, but the bears pushed it back down, and it closed down here. This candle is called a shooting star. It's a candle that shows a reversal may be coming. That's the message this candle is communicating. And it communicates the same message whether it's red or green. If the price has been moving up and we see a shooting star that's green, reversal likely. We see one that's red, reversal is already started. The same is true of this candle right here. Now this candle is called a hammer. It looks sort of like a mallet. This is the head of the mallet, and this is the handle right here. And this candle, when it occurs after the price has been declining, it's considered to be hammering out the base. Because what has happened here is the price declined, dropped, and then who was able to push it back up? The buyers. The buyers came in, they pushed the price back up, and so it closed as a small hammer, indicating a possible reversal. So these candlesticks are communicating messages. The question right now is, do you know how to read the messages? And there are times where we're going to get false signals from candlesticks. For instance, if we actually saw a chart that looked exactly like this, I wouldn't think much of it, because these are all candles of indecision right through here. But isn't it already showing indecisiveness by the fact that it's going sideways? So the place that I really get interested in the shape of a candle is when the price is reaching really high levels, getting really high, extension. That's when we're starting to worry about possible reversal indicators. That's where we're worried about that hammer candle or the shooting star candle or what's called a doji or the gravestone doji or the hanging man doji. That's when those candles start to be an indicator of a possible reversal coming back down. And then of course the same would be true when it's flipped and sort of mirrored, where the price has been declining rapidly, and then you have that hammer at the bottom, or you have the doji at the bottom, or a hanging man doji or something like that. That indicates a possible reversal for a move back up. So there are really two strategies when it comes to trading. There's counter trend trading, and then there's trend trading. Most beginner traders are trend traders because it's easier to understand something that's already moving and to jump on that existing momentum than to try to predict a reversal. Having said that, it's very important to learn to recognize these candles that indicate a reversal of trend may be approaching. One of the things that we're going to start talking about here is connecting individual candlesticks to form multiple candlestick patterns. So while we have individual candlesticks that can communicate market sentiment, when those candlesticks are clustered together and form a pattern, that can create an even stronger signal. So let me show you, for example, let's say we have 3 big candles going up like this, and then we have one candle going as a pullback and a second candle as a pullback. What we're seeing here is that the price has moved up quickly. Now it's pulling back a little bit. This is actually a pattern that we recognize very well as being a bull flag. This green line up is considered the flagpole. This is considered kind of like the actual flag, the pennant right here. That's the shape. And what we look for in this pattern is for the price to break to the upside of this line here, for the first candle to make a new high, and then we look for the price to move back to new highs. Now, to help you understand the psychology of what's happening here, you have a stock or a commodity or a Forex pair, cryptocurrency, doesn't matter, that's moved up quickly in price. And the trend right here for the short term got exhausted. Buyers were no longer willing to keep buying it higher and higher and higher and higher, and maybe some short sellers came in, or some people who were holding it from down here wanted to take some profit. So we see the decline in price a little bit. However, these are 3 small body red candles. They're not a huge body red candle. They're not communicating a massive reversal. This is just an orderly
You sound
pullback.
drunk.
And so
Nah. What do you mean?
Yeah, you wanna play your play?
I'm gonna be drunk again, bro. You're playing good. I got 3 kills right now. Damn. You need to warm up though? Guys, so wake up.
Playing regular or what? I mean rank, right? Regular
I
rank,
don't even know.
right?
Is it rank or what?
I don't think so.
It's not rank? What the fuck?
Oh yes, it is. It is. It is. You got a kill.
I got 4 kills. 4 kills right now, little bro. DC game right here. Like I be playing good when I'm playing solos, bro. Like, I'm unstoppable.
Solos is more easier than fucking duos and squads or trios.
Hell yeah, bro.
Te enfocas nada más una persona. Unless you get third party. Fuck them.
I love getting third party, man. Shit.
Nah, fuck.
So, like whatever, man. If I win, I win. It means I'm the best. Shit. I saw somebody right here. I see him. You expect
That sniper, yeah. That sniper is good only if you hit headshots, bro. They're like
Yeah,
fucking 200
yeah.
something, bro.
It has a lot of recoil, like down.
Yeah.
The bullet goes, it drops. So,
Two traps.
that's all right, man.
Where did he go?
Has to be right there.
Think so?
Yeah. Yeah, that's it. Show.
Se metió dentro. He's running away. Oh, I thought you hit him, bro. The fuck? Go for it, go for it. Get close, you need to get close.
I don't even have movement.
Ahí está.
There's a bond behind. Spin his ass forward.
Or where, yeah, close is fucking good. What?
38.
You hit him?
Yeah. Big motherfucker.
Uno atrás. ¿No le pegaste?
I broke the car.
Pegado de arriba, güey. Está de arriba. Oh shit. Nice.
That nigga dancing.
But yeah, I have. You need to go, Sam. You need to go now.
Dead. A la verga.
Está quitando mucho. Una vez que cierre. Dan la pinche merca y la manda a la verga.
Están arriba, ¿no?
Necesita farmear madera, güey. Bueno. No tienes nada.
I mean, I gotta go anyways, cause
You got what?
I gotta go, cause it's almost about to close.
Oh shit. Farmea mientras vas en mi camino, güey.
A la verga, la rozó este hijo de la verga.
That wasn't a headshot. Oh, my God. Oh, you fucking. He's so weak, bro. How about. Oh, you don't have names, bro.
Come on. Motherfucker.
It's not coming. It's not taking. Mete abajo.
God damn. What the fuck? Like, let me fucking heal at least, motherfucker.
So when we get this type of formation, we look at this as a buying opportunity. The price has really two options. It can either break this level and continue lower right here, or it can break to the upside. And so we get to a point where it's sort of a fork in the road, and which way is it going to go? Now, I suppose, of course, it could just sort of slow down and go sideways, in which if it did that, there's no trade there whatsoever. It's not going to be something that we buy. It's not something we would short. It's just going sideways. But generally, when these have made big moves like this due to some type of catalyst, they're going to be forced to break out in a strong way, one or the other. So in this instance, the momentary pullback, and then here's the next wave of momentum. Now, what's often common is that then we'll see up here a second pullback. And this brings in another round of buyers as it continues even higher. And so if we look at my screen share here, what you'll see on the chart is actually the S&P 500. And this isn't anything particularly exciting, really, but you can see how it's trading in these waves of price action, where we have this this strong move up, this pullback, and then it breaks to the upside. Then it pulls back again, like I was just showing you. It breaks to the upside. It pulls back again, and it breaks to the upside. It pulls back again, it breaks to the upside. And so each time it pulls back, those become buying opportunities. So notice this candle shape right here. If you recall, that is our hammer candle. If we look at this candle right here, this is a doji, which is the bottom reversal. And then this is a doji right here, which was our top reversal. So we're seeing very clearly these candlesticks that we've already been discussing. There's the doji right there, where the open and the close are basically the same. And of course, we have a couple of really nice long body green candles that are forming the bulk of the move up. So this is just an example of multi-candlestick patterns. When it comes to time frames, this It doesn't matter what time frame this is. This could be a 1 minute chart, it could be a 5 minute chart, it could be a daily chart. What's important to understand is that each of these candlesticks represents a period of time. And so if you're an active trader, you're going to be more inclined to use short time frames like the 1 minute or the 5 minute chart. And if you're an investor or a swing trader and you want to hold things for a few days, you'll probably be looking at hourly charts, 60-minute charts, and daily charts to help you find these type of opportunities. These are the patterns that I absolutely love trading. So I'll switch back to the whiteboard here, and I'll show you a couple other patterns that I like. So the first pattern that I showed you right here, this is called the bull flag. And usually on a bull flag pattern, we'll see anywhere from 1 candle of pullback to 3. I don't usually like to see 4 candles of pullback. I do not like to see the pullback here retrace.
Güey, no sé, bro. Like, no encuentro armas y ellos sirven. Like, fuck that,
Right
man.
about here. So an example of a bull flag that would be a broken pattern would be one that goes like this. And
Like,
then
apenas habíamos
a
caído, ellos
long
encontraron
body
ahí,
red
¿no?
candle
You gotta
right
know where the
here.
chests are, man.
That's no good.
That's the thing, I don't know where
believe
they're at, bro.
It's
It's a fucking new
more
play.
than 50% of the move.
It's,
All right.
well, I've been playing to like.
Alternatively, if we have 1, 2, 3, 4,
shotgun,
5,
that's it.
6 red candles, we're running out of steam. That's not good either. If this was really
¿Qué puedes
strong,
hacer? Pegarle con el
we would have
pistoletaje.
a momentary pullback before the next round of buyers come in and said, I want a piece of this action for the next leg up.
I don't know, verga.
I like to trade.
Ah,
the
man,
first
necesito aprender dónde están los chests,
right
bro.
here,
O caer en
the
una
first
parte donde ya
flag,
sepa
but I
que
like
hay
to trade the
chests.
second one right here.
Like,
I have
afuera.
often
Yo sé dónde hay afuera, pero
the
adentro no
first
sé
two,
nada,
When
güey.
you get into the third, the fourth, the fifth, they're not as clean because most traders who are
Meter afuera, güey.
aggressive and are successful
Okay,
have already made their money in the first 2 and are not going to overstay their welcome. It's usually the rookie traders that end up overstaying their welcome. So it's better to get in, get green, and get out. Okay, so this is the bull flag. That's a pattern that I really like. It's a multi-candlestick pattern that requires 2 to, well, it could even be just 1 huge green candle, but it requires a nice big move up with some long body candles, light volume pullback, not retracing more than 50% before moving higher. There's another technical indicator that I use to help me make sure this doesn't pull back too much. I'll talk about those in just a moment. All right, so this is the bull flag. Another pattern here that I'll show you is called a flat top breakout pattern. Now this is formed, this would be a little bit of a gap here if that really happened. Basically a flat top breakout pattern occurs when the price is hanging out right underneath the highs. And what ends up happening is it pulls back just a little bit and then it goes back up. And what we end up sort of seeing is that we have this support line right here. And what ends up happening is it pushes the stock through this level. And when it finally breaks out, we usually get a nice big long body green candle. This is called a flat top breakout pattern. We have a flat top breakout pattern, a pretty close flat top breakout pattern on the S&P right here. It's pretty close to that right there. This, I would say, is a pretty good example of a classic bull flag. 2 nice big green candles, 2 candles there, pullback, and then making a new high. This right here is called an ABCD pattern. An ABCD pattern occurs when the price goes up. Hopefully this, just kind of mark this separately. Price goes up, we get a little bit of a pullback here, and then we come back up, but it fails. It doesn't go through the high the way it should on a bull flag, and it pulls back again. Now, this is okay, because this can create a really powerful breakout, so long as when it pulls back here, it doesn't break below this price here. So this becomes an ascending support line that has to hold. It's like a flat top breakout pattern, but a typical flat top breakout pattern, all of the price action is within like 10, 15 cents. It's like right underneath the high before it squeezes up. It never really pulls back, whereas an ABCD pattern right here does pull back and then is really a failed bull flag that pulls back a second time But the second pullback is actually an opportunity for it to accumulate even more buyers. So when it does break out, usually the breakout is even stronger. So this pattern is just fine. I really like that one. I would say these are 3 patterns that I trade pretty much on a daily basis. Something that's worth mentioning is that as an active trader, it's more important that you love what you're trading than that you're necessarily trading the perfect pattern. So if you love trading a certain stock or you love trading Bitcoin, whatever it is, you want to focus on trading.
Pegué uno ahí a como por like 40
If
white.
the ABCD pattern forms, the pullback, the move up, and then it goes, you trade the ABCD pattern. If it's a flat top breakout pattern, you trade the flat top breakout pattern. If it's a bull flag, you trade the bull flag. You trade the pattern that is presented. The most important thing is that you make sure you're focusing on the right thing to trade. You're looking to trade something that has liquidity, that has volume, that people are interested in, because that's where you're going to see the volatility. As active traders, we thrive on volatility. We need things to be moving. Well, look, we don't make money if we're trading something that's not moving in price. So we're looking for things that are moving and moving relatively quickly. So now let's talk about those technical indicators. What these do is they help provide more context for the
Ya aquí abajo está uno mío.
So
Yeah, I'm
this
still
is a
this
stock
way,
chart, and we can see obviously the price is going up, but what we found is that most stocks, most currency pairs, most
Or just
futures
not?
commodities
No, just
respect
not,
certain
I got it.
technical indicators. One of the ones that is very popular is called the
Tengo buena
volume
tarde.
weighted average price. I'm going to turn that on first. So the volume weighted average price I have down here in orange.
I just need a
This tells
shotgun.
us the average price of the stock over the period of day with volume factored in. And so this really shows us our exact equilibrium point
Barrels over
of
here.
the stock, or whatever it happens to be that you're trading. This is important because if the price is below the equilibrium, well, that's when you've got the bear. Let's give you a picture of a bear. Okay, he's got like a little smirk. All right, that doesn't look a lot like a bear, but bear with me.
Allá afuera había
this
gente,
is
okay?
bearish. Now, if you're
that's
above the
a
volume
shotgun?
weighted average price, that's when
¿Qué
you're bullish.
encontré
I'm not
entonces?
even gonna try to draw. So that's when we're bullish. So we're green above, we're red below. So this is really helpful because when we look at the chart, what we want to see if we're thinking about being bullish in a position is that the price
No,
is
allá afuera
above
había.
the volume weighted average price level. So you can see how early in the trading session, this actually dipped below that level, and then it got back above it. So just from that perspective, the moment it was back above it right here,
Where?
from that point forward, this was in the hands of the
Right there in the
bulls.
pole.
Now, if it got back below and held back below the VWAP, this would have been back in the hands of the bears. So understanding the general
65?
considering taking a position, because obviously you're going to be choosing long or
push.
short. So volume weighted average price, super important indicator. It's used for intraday trading. Now, one other thing I want to mention about VWAP is that it's considered a very well-respected support resistance. And so what that means is that if, for instance, the stock has been below the VWAP, and I'll just do black here just to make it easy for me, and then it comes up to it right here, it's very common that the price will fade off of this level, and that this is resistance. Sometimes we'll see the stock will try to break, and it won't be able to fold over, and immediately comes back down. And when it comes back down, that is just reaffirming that the bears are in control, because it tried to get above it, but they brought it right back down. Now, this is the same is of course true if a stock is on the upside. So you have a stock that made a really big move, it pulled back, came back down, and then at VWAP, maybe it dips for a moment, holds that level, and then heads back. VWAP, which essentially is buying close to support with profit target back up to high. This is your risk. That's your reward, so your profit to loss ratio is great. Same with a fade off of VWAP. You know, shorting right here with a stop, and then your profit target's way down here. However, something that's also really interesting with support and resistance levels in general, and we're going to talk about this more in just a moment, is the way price behaves when we do break. So when we have a stock that's
he might be hiding, bro.
it's been below VWAP, so maybe it came up It hit VWAP, it did a fade off VWAP, came up again, faded,
Bottom, man.
and then came up again, and it's like, this thing, and it's holding,
Yeah,
and
yeah.
it busts through. It gets
Yeah.
above this resistance
No, I
level.
don't know.
So, sometimes, dramatic rejection, back down. Alright, but let's talk about the other situation. Other situation, it breaks, it comes back down.
Adentro del túnel
and
se metió alguien.
now the bulls
Attractive.
are defending
Es una-
this level and buying
a mí.
off of this level because the price, VWAP, it's above. So what you have is a break of resistance, a retest to see if it's gonna hold. And if it does, then prior resistance becomes support. And now people start buying right here with a stop just down here for a move back up. And this is when we have that
Really nice.
that sort of trend change
Got
of the stock being in the hands of the bears
Tiene escopeta.
to being in the hands of the bulls. You know, it's different
me.
from the trend changes
popping
that
a
we
big
have
quick.
when we have a stock that's been, you know, trending up nicely, has two candles of pullback, you know, goes higher. You know, in this context, this is kind of like the tide is coming in. This is the wave, you know, even when the tide is coming in, you have wave. The wave that comes up, down a little bit.
Nice.
The next wave comes up a little further. Then it comes down a little bit, then it comes a little bit further. When we break
Se nos
over
fue uno
VWAP,
allá, pero
that is more like the
Aquí vas
tide
cobrando
changing
este,
from
¿no?
going out to now we're making a much more significant change when we break over that volume weighted average price. So volume weighted average price is probably the #1 most important indicator for day trading. However, more important than indicators ultimately are the candlestick patterns. Candlestick patterns are #1, but these indicators are really helpful to understand context of current price, and they're important to use because pretty much everyone uses them. So if you're trading without VWAP, that would be like driving around without looking at stop signs. I mean, other people are using them, and if you're not, you're kind of an idiot. So, I mean, that's a little bit mean, but if, of course, if someone really was driving around using stop signs, you would understand.
Crack.
So, again, my job here is to teach you how to use these technical indicators so you can apply them in your trade. This is all about how to read stock charts for active trade. Okay, so we've got the VWAP. What's next? Next indicator that's really important is the
Dumping on you.
non-exponential moving average. It's a gray line right here, and notice how the price keeps coming back to the 9 moving average. The 9 moving average represents, during these flag patterns, a good place to take that entry. So a lot of these will stair step up. Step kind of going the stairs here. And a lot of these, as the edges of the step, are going to come down towards that. Now it kind of flattens out here, and
Hit
then
me
it
hard.
starts to break away again. Alright, so finding entries near this moving average is usually a safe place. I find that if the price breaks the 9, the next level that we're looking at is the 20. So we've got the 9 moving average, which is our first level of support, and then we have the 20.
I'm up.
So there are a lot of times where I'll see the price coming down, and I'll say, I could take a starter right here at the 9 with my stop loss at the 20. Now, I'm not going to get into strategy as much in this particular class because this is really focused on technical analysis, but just for your understanding, these are very well-respected levels of support. So you can see, really, this held the 9 moving average through this whole stretch of the day.
You need more
So
grenades?
as long as it doesn't stay below it, I'm bullish, and I'm happy to keep
Grenades,
holding
grenades,
a position.
grenades.
or
Yeah.
position. The next level is the 200 moving average, which is going to be
Tírale,
much further
tírale.
down. In this case, it's below volume weighted average price.
Spray,
So
spray,
it's
spray
not
here.
really relevant for the price right here because it wouldn't be a buy below the volume weighted average price anyways, anywhere below that.
Going up.
I'm not
Alright,
team.
so those
Chill
are our
out, chill out, chill out.
indicators.
Come,
Alright,
come,
so
come,
let's
come.
mark this out.
Box over together. We gotta go to zone. Fuck.
We've got,
I got sniped. No,
we've got the
I-
9 EMA,
aiming
we've got
on
the
me.
20
No way.
EMA, we've got the 200 EMA,
Calm down.
and let's not forget, on all of our charts we have
He can't get me.
bars. So at the bottom of the chart down
You could. No, you already put right there. You should have
volume
built.
total, which is telling us the the number of shares that were traded during each one of these candlestick periods. And this is important because what we look for is when we have strong upward momentum like we have right here.
That fucking guy, bro. That's the same guy. Fucking killed me. Wait, we playing trios?
See the price is going up, but we also want to see
No, bro, yo miré otro güey antes.
that are associated
Esa
with
güey.
those long body candles. So this is called the volume profile. And
La
the
otra era
volume
otro skin.
profile does communicate market sentiment. So if we
bad,
had an instance where we were looking at, let's just say, a bull flag forming, and we initially had this nice move up right here, you know, 2 big green candles, and then we have a red candle and another red candle. Well, let's just say that the volume on the green candle was like this and like this, and then the volume on the red candle was like this and like this. If you have more volume on the red candles, more selling volume, that's a factor in this pattern. So you have to factor this in as part of your technical analysis. Volume bars are an important indicator. If you have high volume during this pullback, that indicates a lot of people are selling into this pullback, and it may
They haven't get on. Ready up, ready up.
I only hurt when I'm alone. I don't let people see me hurt.
Damn. Oh, never mind. Hot drop. Oh, my bad.
You jump. Why you jump?
It was an accident. Red house.
This one?
Red house. Red house. To your right.
Yeah, I thought I could drop first. Bro, if I would have had a fucking AR, you would have fucking beat that bitch. You good? Aquí hay mini, ¿cómo se llama? Pura, güey. ¿Conmigo?
You got people?
Yeah, hombre. Down here.
Yeah, I'm about to die.
Uh,
Yeah, I'm dead.
the fuck are you doing, bro? No, venía atrás mío agachado, güey. El hijo puta me falló todas las balas.
I think I killed one.
Tienen dos para acá.
Got it. Salte de ahí, güey. No estés perdiendo, ya lo bloqueaste al lado. Ahí están los barrels. Vienen.
I need to wrap your car. Oh, right here. This way. Didn't even get you loot.
Ahí está, viene. Está atrás de ti en el fence. En el fence abajo, a tu izquierda.
I'm trying to go in. Va a haber gente ahí. I know that for sure. Okay, that's not right thing.
Okay.
I think. We'll try. We'll see what happens. En cofre aquí creo. Ah, ya.
Where's the vaults?
Aquí no hay.
There's vaults in this thing, so
Hay una launch pack aquí.
we'll go straight over here. There's a chest over here.
Got it coming. You got mini?
Got barrels. Lunch right here.
Aquí están los bops, güey. Está. Bops, aquí. Listo, güey, por eso.
People on me.
People on you?
Yeah. I think I saw them. Maybe like on southeast.
I don't see anyone. You sure?
Maybe not. Probably saw shit, bro. I want this.
Big buck? No. Oh. You should carry it.
What happened? I don't know.
You need ammo?
I'm good.
Oh, I got a fucking red X on my fucking. People on the bridge. Oh, esa mierda creo.
Are they?
No, yo creo que son los bots.
Kill them.
Sí, son los bots.
You wanna kill them?
Verga. Vamos a llamar un verga la atención con ese pinche mierda. Tienes que dispararle atrás en la...
Kill them already. Oh, you got a termite. Over here.
¿Tiene ese güey? Oh. Gente de este lado, güey. Me letearon, güey.
Yes.
Dead, uno.
Oh, on me. Real person on me.
Yo sé, güey, te dije que había gente. Te dije que había gente, güey, no mames. ¿No me escuchaste?
Yeah. But fucking the bots fucking be confusing me and shit, bro. See if we get the guys over here. 8. arriba el güey.